Hello! This video is intended to all beginners who would like to venture in stock and forex trading. Today, we will be looking at the different kinds of candlestick as well as the different meanings and names. These candlesticks are classified into categories on the basis of the size of the real body and wick. Now let's start how the candles form during the day of trading. The start of the market is mostly between 9 a.m. or 9:30 a.m. It will start with an opening price. Thereafter, buyers and sellers will start stepping in. Then the buyer will start buying, and then the seller will start selling. If the buyer is less or not active or doesn't want the price at that time, the seller will be pushed to sell their shares in a lower price, causing the price goes down. In reverse, if the buyers are more active and willing to pay in a higher price, the seller will sell their shares in a higher price, which moves the price up. So, it will be a continuous action between the buyers and sellers throughout the whole day. Pump up and pump down, up and down like a roller coaster, you will notice. It is just like a tug of war fighting each other. The body of the candle will be clearly seen during almost the end of the trading day. So most of the professional, institutional trader will start coming in, especially in the last 30 minutes of the trading day, because they can project what is the ending of the day, if it is bullish or bearish. If it is long bullish body, that represents strong price movement and might continue the action on the next day, or short bullish body that might need an additional care in entering. The same thing in the bearish candle, a bearish long body which represents selling pressures, and most professional and institutional traders are only watching and not putting their position, because bearish long body may be a sign of price down on the next trading day. That's how the candle will form in a day. In bullish candle, the closing price is higher than the opening price, while in bearish candle, the closing price is lower than opening price. The vertical lines that build at the top and bottom of the candle is called wick. The wick at the bottom is the lowest price of the day, while the wick at the top is the highest price of the day. And the whole rectangular shape of the candle is called real body. Bullish candle mostly represent by green color, while the bearish candle represent by red color. Now you understand how the candle was formed during the tug of war on a trading day. Next, I will explain the different kinds and names of candle and sentiment beyond it. Before we continue, please don't forget to press like, share, and subscribe to my YouTube channel. And also please press the notification bell to inform you on my next video. Bullish long body with a wick at the upper and bottom of the body represent a strong price movement during the day. At the start of the day, less buyer comes in, wherein the seller pushes to sell in low price until come to a point that the buyers becomes active and don't want the price to go down, which create wick at the bottom. Pumping up and sellers are happy to sell their position in a higher price and reach again at a point wherein the buyer doesn't want to buy anymore in a higher price, and price will go down and create the upper wick. The bear is in control during the beginning and ending of the candle. The bullish opening marubusu with no wick at the bottom but have a wick at the top of the long real body. This represents a strong price movement during the day. It creates a higher price, but it comes in a point the buyer lose their willingness to buy at the high until the seller forced to sell the price down, which create an upper wick. The bear is in control at the end and closes the trading day with an upper wick of the candle. This candle formation is stronger than the bullish long body with wick at the top and bottom because in the opening price, the buyer becomes more active in buying that pushes the price high. Likewise, the bearish opening marubusu, the buyer doesn't have any interest to buy in a high price, but in a low price, which causes the price to go down. Next is bullish closing marubusu, with a wick at the bottom but have no wick at the top of the long real body, represent a strong price movement during the day. At the opening price, the moment there is no buyer interested to participate in a higher price, that pushes the seller to sell in a lower price, and then the buyers start buying, causing the price to go up and past the opening price level, which create a bottom wick, and continue to pump up until closing of the trading day. The same system in bearish closing marubusu. This candle form is more stronger than a bullish or bearish long real body with a wick at the bottom and top. The bullish or bearish marubusu is the strongest candle because it does not possess a bottom or upper wick, but only a real body. During the start of the trading, the buyer is continuously buying going up till the closing of the trading day. With the bullish marubusu, the opening price is the lowest price of the day and the closing price is the highest price of the day. While the bearish marubusu, the seller continuously selling their shares in a low price, resulting to the price to go down till the end of the trading day because there is no buyer willing to buy at a high price. The bearish marubusu, the opening price is the highest price of the day while the closing price is the lowest price of the day. These are the sample of marubusu in the trading chart. Hammer or hanging man looks the same. Their names and meanings derives from where they appear. The real body color is not important. The real body is small. The opening price and closing price is near to each other. The wick is long and signifies that the seller is in control in the beginning until the buyer step in, pushes up and closes near the opening price. Hammer appears in a downtrend, and it is an early indication of a potential bottom and a sign of reversal of the trend. This is a clear win of the bull where the buyer pushes the price up. Likewise, the hanging man is almost the same of the hammer, but it appears in an uptrend condition, and it is an early indication of a potential high and a sign that the trend is going to change. Spinning top is a candle with a small real body, a long wick at the lower and upper of the body. The small real body is evidence enough of trader indecision, as the bulls and the bears struggle to dictate price direction. The upper and the lower wick shows that both the bulls and the bears were exerting pressure during the period, but in the end of the trading day, the price closed near the open. Remember that the color is not important, but the struggle of the bulls and bears in dictating the price direction indicates on the wick of the candle. Doji. Doji is a form of candle where the opening price and closing price is equal. This signifies indecisions among traders, and possible reversal of the trend or direction. Long-legged doji is a form of candle where the opening price and closing price is equal, and it has a long lower wick. This signifies indecision among traders and consider reversal signal of the trends or direction. The long lower wick shows the battle of the bulls and bears throughout the day. Gravestone doji is a bearish in the uptrend market, with an equal opening and closing price. The long upper wick shows a dying bull. That is why it is called gravestone. This particular doji shows that the trading open price was pushed noticeably higher and reversed lower and closed with the same opening. This demonstrates a failure of the buyers to be able to sustain an upward price movement. Dragonfly doji is the opposite of the gravestone doji. Dragonfly doji is a bullish in downtrend with an equal opening and closing price. The longer lower wick shows the awakening of bulls. This particular doji shows that the trading open price was pushed to noticeably lower and reversed higher and closed same with the opening. This demonstrates a failure to sustain downward price movement. Now you understand the different shape of candlestick that you will see in a trading chart. One candlestick represents one day of the trading on the daily time frame chart, or 1 week in a weekly time frame. That's the end of our session in understanding candlestick. Watch for my next video regarding candlestick combination of 2 or 3 candle, the reversal sign. Thank you for watching. Till to my next video. Bye!